Here we go. I'm going to start off with the general ledger accounts and just basic setup of the general ledger accounts. When you set up your accounts, there are 4 different types that can be specified for each general ledger account number. There's the statement type, the account type, a subtype 1, and a subtype 2. And all 4 of these are dependent upon each other. So when setting up new subtypes, for example, you're going to have them dependent on different account types that are already set up. These 4 fields are used to categorize the general ledger account number when running financial statements. So these pass directly over to the financial statements. So depending on how you want those statements to look, that's how you're going to define what these kind of type fields are when you're setting up your general ledger accounts. I'm going to just click on one of these accounts here. And in the setup, you have your type set up here. There are a couple other fields that are set up if it's a bank account and if you're running checks out of the account. There's a field here that you're going to check off to define if the general ledger account number is related to a bank account or a credit card account. And just by putting a checkbox here, this will allow you to make payments out of this account, receive cash into that general ledger account number, and also run bank statements from the account. So you just need to make sure that you check that off so that you can run your statements for your real true bank and credit card accounts. If this is a bank account that you're going to be printing checks from, you have a spot here for the last check number. This can be modified as you work through if something happens to a list of checks, but generally, as soon as you enter your last check number in here, as you print checks out of the system, it's just going to continue to increment and keep track of the last check number that was used. So there's not really much. That's the basic setup of the general ledger accounts. And I have over here on the right some related lists. So whenever any transaction is posted related to a general ledger account number, a GL entry record is going to be created. I'm just going to click view on here. You can see all the ins and outs to the general ledger account number are going to be created by general ledger entries. And that's just going to keep track of all of your debits and credits, posting date, document number. There's a lot of other information. I'm just going to click here just to show you one of the general ledger entries. Depending on where the entry came from, we have these source documents. So for one general ledger entry, you're always going to be able to know if it came from an invoice, the invoice number would be here, a purchase invoice, vendor payments, customer receipt. So you know where the document came from, and it's always going to be related to that other document that was generated. So that you can always kind of see where your general ledger entries came from. Okay, and I'll just go back to my general ledger account. So we have all of the details held in the GL entries. We also have what's called a GL summaries. And these entries are monthly entries. As you can see, there's one entry per accounting period, which is per month. And the system will automatically create these general ledger summary entries. Whenever anything's posted to the general ledger, if a general ledger entry is created, it's also created into the summary entries. And that just groups all of your information together. So you can see here, I have 2 entries in May to this general ledger account, and I have 1 May summary entry that just totals up all of the general ledgers. As more things get posted, this number is going to change. It's going to continue to calculate. So if there are any more entries posted in May to this account, the summary account will just be adjusted and recalculated. The reason for these general ledger summaries is for ease of reporting. So when you run your financial statements, instead of plowing through all of the general ledger entries that are created, which there are a lot, the system will use the GL summary entries, and it just speeds up the reporting. So you don't have to wait a long time to generate your financial reports. The system will just pull directly from the GL summary, so you can get more real-time reporting done from your financial statement. Also, if I click in here, these are always going to be related to your general ledger entries. So you can see here for this summary entry, the total $854, these are the general ledger entries that comprise that $854. So everything's always going to be related to each other, so you can kind of navigate through the system that way. All right, so that's the basic setup of your general ledger accounts. What I'm going to do, and I don't think I have it here, I'm going to go into the company setup, which we have been through before in more detail. But here in the company setup, I'll just peruse over. We do have all of the general ledger entries are defined here. Your AR, your AP, your inventory general ledger accounts. So as transactions post in the sales and the purchase side, this is where the system comes to find the general ledger entry to utilize. And then again, the account posting setup as well. This is where you're going to see your sales and cost of goods sold general ledger account number. What we also have in the company setup, I want to go through a couple of things we hadn't done before, is we also have account variables that can be set up. And this is a way to subdivide any general ledger account number. So for example, I have these 3 account variables set up: admin, sales, and marketing. As I go and post any general ledger transaction, I can define a specific variable. So that's just going to subdivide any general ledger account number. And I'll show you this. I'll show you this in just a regular general journal, how we can break this apart. But variables, as they're set up, it's a very basic setup. You have your name, and then you have an account type. There are 4 different account variables that you can utilize. We just have them named: variable 1, variable 2, variable 3, and variable 4. You can certainly go through and change the name of this. If, for example, if it was department or project or cost center, you can change the name, change the label, go through and change the labels from account variable 1 to the true, like maybe department, so that when you are entering transactions, you have a column for the department, and then you can define if you want admin, sales, marketing, whatever your departments are. And we do have some documentation on our site that will tell you there are a lot of places that you would need to change the label. So if you want to change the label name of this account variable, we do have it documented, all of the different objects that you would want to go through and kind of change the label on. So that's just seen in our documentation. You can refer back to that. So now, having set this up, next thing I'm going to do is I'm going to go over and I'm going to post a general journal. Just go through the general journal process now that I have my account variable set up. I'm just going to come and select here the general journal. You can see all of the general journals that have been created are entered in here. What I want to do is just click on a new general journal. So there are many ways that you can enter journals. One way, of course, is to manually enter it. Just enter whatever date this is processing for. And if I click on add lines, I'm going to add general ledger account numbers. So I can add any general ledger account number, and then I can enter the debit or credit amount. You can enter it in the debit or credit column, or you can just enter the amount as a debit or a credit amount. So if I'm here crediting this bank account general ledger account number, as soon as I hit the amount, or hit tab or leave out of the field, the amount column's automatically going to populate for you, and it's going to add a negative for credit amounts, and it'll be sitting here for positive for debit amounts. You can enter any descriptions in, and here you can see this is where I have my account variable 1. So here I can enter any general ledger account variables. I'm going to, if for example, if this is a payroll transaction, I'm going to enter my payroll general ledger account number. There you go, my payroll expense, my amount, and then I can enter a variable. So if this is for admin, for example, I just enter the variable there using this 550 general ledger account number. And then I can add more different variables. So if I have, for example, 2,000 to a marketing variable, I would enter the same general ledger account number and then just enter my different variable. And this is just going to break out the accounts, break out the general ledger entry as it's being created, so that you'll be able to report on this variable as well, so that you can see things kind of dividing out. Even though it's rolling up into the same general ledger account number, you're going to have a breakdown of different variables. So once I have all of that entered, I'm going to Just click on save, and then I'm going to post this entry. The system's going to check and make sure that my debits and credits match or equal so that I have a $0 balance, and then I'll be able to post the journal. You won't be able to post any journal unless if it balances out to 0. So now that I have this journal posted, I can see my general ledger entries that have been created have a GL variable associated with them. So now this you can be utilizing for recording. All right, so that's one way to enter a general journal. You can also clone journals. So if you have a general journal that you use often, you have your information in here, there's a clone button that you can just click on clone, and that will automatically create a new general journal with the same exact information on the lines, but just a new posting date. So now it's going to assume today's posting date. And you can come in here. Now I have a general journal that's been created, hasn't been posted yet. I can come in here and edit. If you need to make any different adjustments, you can change the amounts. And then you can just come in and you can post the journal just as you normally would posting a journal. All right. And then there's also, we have recurring general journals. So these you can set up. They're kind of as a template that you can set up. I have here one set up. I'm just going to open it up so we can see the detail. It is defined to be entered monthly. We have options quarterly, semi-annually, annually. But we can come and this will just create the journals for us right from this recurring journal setup. It keeps track of the last date that the journal was created and then the next journal entry date. As it's monthly, it's just going to continue to increment each month as different journal entries are created. You could see here, these are the general journal lines. So you would enter as many lines, the same thing, the same way you would a regular journal. You can enter the account, the amount, and if you have any variables, you can enter that in here as well. We can have this automated. You do have an option to exclude from automation if you'd like, but you can set up a job that will automatically go through and create the general journals from the recurring. Or you can also come in here manually and just click on Create General Journal. Select that there and then click on Create General Journal. And what this is going to do, it's going to take all of this information that it's been entered and it's going to create a general journal for me. You still have to go through and post a general journal, but all the data is going to be there. And you can see here, as soon as I create the journal, the last general journal date is now May 1st, and then the next one is June 1st. So it's just automatically going to increment those dates. If I come in here to the recurring journal, you can see that has been a general journal created. This is the one that was just created. The status is still open. So you can go here to the general journal. You can see it's just populating the lines exactly as they were on the recurring journal. And then you would post your general journal. If everything looks good, you can go ahead and post that. So that's another option of how to get general journals created. You can also import general journals. We have a function that's called Import General Journal, and you can come in here and import a CSV file. I have here a sample CSV file, and this again is on our website and it has the templates, so you can download the templates. But here it's just having, my basic information, what's the general ledger account number, the amounts, if there's a variable or not. And this file is just going to be saved as a CSV file. And then what I'm going to do in this import general journal function, I just click on import CSV. I'm going to choose that file and upload the file. What the system does, it brings everything into this kind of temporary object, this import general journal object. So you can see all of the information. It hasn't been processed yet. Nothing's been created. But here's all of the data that's been brought in from the CSV file. If everything looks good here, I'm just going to select all of these and create the transaction. And this is going to go through and it's going to create a general journal for me. So successfully has been created. So now if I go to my general journals, this new entry has just been created. And it doesn't post automatically, but you can come in here now and you can see that here are all the transactions that were imported in from that CSV file. If everything looks good, I can come in here and post my general journal. So those are the different ways. There are many different ways that you can get that general journal created, depending on the situation and what you're trying to accomplish. I did want to mention that import, and I'm going to come in here and just show you, the import general journal function is one of a few import functions. So if I just come in here, there's different import functions that are built into GoldFinch. So you just go the same thing that you just saw me do on the general journal. We have a template that you would populate the template, save it as a CSV file, and then through all of these different functions, you can come in here. If everything looks the same, you import the CSV file. Once you have all the data, you create whatever you're trying to create. So if we want to create here different item formulas, the different import functions would create those different formulas. So there are quite a few different import functions. And if you just go to the documentation, you'll be able to see the templates, and you'll be able to work with that and import different data. That's really on the general journal side. Then we're going to move on to the next thing that I want to go through is how costs of goods are calculated and kind of how you're going to see the cost of your inventory. Costing is a huge subject, right? There's a lot of things that go into costing your inventory. So we're just going to go through some of the transactions of how this all works out. First, what I'm going to do is I'm going to look at one particular item so we can kind of see the costing of this item. So here we have this one item, this demo 7200. Right now, there's 10 on hand, and we have an inventory of value of $52.50. So, and here is the unit cost of $5.25. As you sell this item, this cost is going to flow over to your costs of goods sold, right? As long as you purchase and you keep that cost, it's just going to flow right over into the cost. So what I'm going to do is I'm going to enter a sales order for this item. I'll just enter a quantity. I have a price here. The cost will automatically come over. We have this set up on FIFO costing. Generally, that's what we're going to be utilizing is FIFO costing. As soon as I enter the order, we're going to be able to see here. Here we go. Here's the cost. So the order cost, the total, so for $5.25 each, I have a quantity of 3. So my total order cost is $15.75. Calculate through and give me a profit of this particular order. So if I go through and I create the shipment, I'm going to ship these goods out, and it's going to assume that cost. I'm just going to post that. Oops, sorry, I forgot I was set up to create correct tickets. Oh no. So we have our warehouse shipment. Now the goods have been entered in. Now I'm just going to create my invoice from here, right? Because I'm selling the goods. And I'm going to keep the dollar amount. Okay, now we can see as we posted this, you can see here the receivables and the product revenue is posting, and also our cost of goods sold for the $15.75 has posted. Now, that's automatically what's going to be posted here. What we can do is we can drill down further and see where that information is held, and everything's going to be linked together. So from this sales invoice, I have cost entries that have been created. So this is where we're going to be able to see, here's the general ledger cost entry that was created, and it's linked to a specific item ledger entry. So I'm going to go to this item ledger entry. This is the shipment. When the shipment happened, this item ledger entry was created, and we're going to associate those cost entries directly to this item ledger entry. Now, this is a shipment, right? It's also applied to, so this is an outbound entry. It's applying to an inbound item ledger entry, and that inbound item ledger entry is where the cost is coming from. So you can see here, there's this related section that tells me the application. So this is the item ledger entry I'm looking at, 79. It's related to an inbound item ledger entry, 78. So this is where if I click on this inbound item ledger entry, this is the receipt of the goods. And this is the cost that the item came in on. So these two are always going to be related together. As you relieve inventory, the item ledger entries are going to be applied to inbound entries. So that's how it keeps track of how things are coming and going and how the cost is flowing over to the sales. So these two are always going to be related. The next thing I'm going to go through, which Britt did touch on, is processing landed costs. So if you have freight information or freight bills that come in that you want to increase your cost for, we do have a couple different options of how to handle landed costs. I'm going to go back to my company setup, and we have options of either actual landed cost or I think it's estimated landed cost. And there's an option here that you can define if you want to enable the actual landed cost assignment, which that means you get a freight bill in for a certain amount, and you're going to say, this freight bill, I'm going to assign costs. If it's a $100 freight bill, you're going to assign costs to different goods, the different receipt lines that have come in, and it's going to be specific. You can also do an estimated landed cost where you can define an accrual landed cost is really what it's called, where you can define on each item, you can say there's so much percentage, like maybe we're going to add 5% for landed costs. So the cost anytime you receive goods in is automatically going to be increased 5%. And it's more of an average that you're going to be doing, but it's not really the actual true cost. And then kind of at the end of the month, you can adjust things if needed. But what I'm going to go through today is the actual landed cost and how you process those, any freight or duty or any other costs that you want to associate with your items. So with that field checked, there's a section here called Company Extended Setup, which is just kind of some additional setup features. In here, I'm going to use the landed cost function. You can have up to 5 different landed cost sections or areas. I have landed cost freight set up. So when I receive freight bills in, I'm going to assign costs to multiple receipts and multiple items that came in and just kind of increase the cost of those items by the freight that's being brought in, that's being paid as well. And this is the same. You can change, the label of this. I'm just kept it as landed cost 1 to kind of keep things simple. But you can have multiple, as many as you need, but each one has to have one service item defined. So I have this one service item, this LC, landed cost freight service item. See, it's just set up as a service, as an item, and the type is service. So I can process any purchase receipt invoices that come in. I can enter this service item, and that's going to automatically be set up because it's defined here that it's a landed cost item. Right? So once I have that set up, what I'm going to do is I'm going to create a purchase invoice for the freight that comes in. All right, so I'm just going to create a purchase invoice. I'm not dealing with any inventory on this invoice or this receipt in. It's just the freight that I'm going to be entering here. And I'm going to enter that item, landed cost freight. Enter my quantity of 1, and then I'm going to enter a dollar value. So say it's a $100 freight bill that came in. Once I have this information entered in here, I basically just need to save this invoice. I can just click on Quick Save. And I'll just kind of save all of the information. And when it goes through the saving process, it notes that this is that landed cost service item. And then now there's a separate button here that says Assign. So because this is a landed cost item, you must assign this cost to receipts that have come in. So what I'm going to do is I'm going to click on the Assign button. And then I'm going to say I want to assign the inbound landed cost. Here I have all of the receipts, whether it's from a purchase order, or you can see here also from a transfer order. These receipts that have been processed in the system, these are all of the receipts. You can come up here and filter different ways, however you want to filter maybe by posting date, or if you have specific receipts or a specific purchase that these freight items are associated with. You could set different filters here. And basically what you're going to do is you're going to select the different receipts that have the inventory item that you're going to assign the cost to. I'm going to select a couple of them here. And then I'm going to click on Add Lines. And you can see here, it just kind of moves those warehouse receipts down here. And this is just kind of a holding place. So you can go through, and if you want to add more lines in here, more receipt lines, you can select. If you selected the wrong receipt line, you can remove it out of here, whatever you want to do. But basically, at the end of the day, what you have down here in the selected receipt, warehouse receipts, these are the entries that you're going to apply to. You can see here that the document status of 2 of these have been fully invoiced, meaning the purchase invoice has gone through. One of the warehouse receipt just has the document status of posted. That just means that the warehouse receipt has been posted, but the invoice hasn't been processed yet. And that's fine. So you can, as long as the warehouse receipt has been posted, it doesn't matter if the vendor's invoice has already come in for the goods or not. So I'm going to keep these warehouse receipts, and I'm just going to click on Assign and Return. What the system is doing now is it takes all of the items that were on those warehouse receipts and it lists them out here, and it automatically assigns an invoice cost. So it's increasing the cost of these receipts. It's assigning by quantity. So it's just taking the $100 and it's just breaking it out evenly for each item on all of the receipts based on by quantity, right? So the higher quantity gets the higher amount, and the lower quantity, of course, gets the lower additional costs associated with it. You can come in here and override this if you'd like, or you can just keep the default how the system, just kind of divided it all throughout. So once I have this as I want, then you just click on Save and Return. And this is going to bring us back to the purchase invoice. And I'm just going to click on Save on the purchase invoice and get ready to post it. But what happens here, once I go through that save process, there's additional purchase invoice lines that are created. I have the one line that I entered, which is the freight. It has a line cost amount. And it also has the line type of inbound landed cost one. And then all of these additional 4 lines have been created because I've assigned the freight to these lines. These are the warehouse entry lines that we just saw, the different items that it's assigning to. The line cost, you'll notice, is 0 because the line cost is actually the invoice cost. So it's not increasing the invoice amount at all. This is just kind of keeping track in these purchase invoice lines what application has happened. So you can see here, here's the invoice landed costs for each of these lines that is going to be increased. So the inventory items are going to increase their value by processing this. And also you can see the line type is assigned line, and they're all related to this one freight line. So now that I have all of that information entered, I'm going to post the invoice. You can see it's just for the $100, posting to the vendor. And now, once we have that posted, I'm going to go to the general ledger entries. You can see the transactions that occurred. We have the $100 in total posting to the accounts payable. And then so that's going to credit the accounts payable. And then on the debit side, we have, based on the items that were selected, it's going to post to their associated inventory account. So $33 went to finished goods inventory that was set up there and that we applied to, and $66 has gone to increase the raw material value. So these accounts, they're automatically created. So the system will go through based on those items that have been applied and find the correct general ledger account number to post to. And then what we can also see here is cost entries were posted as well. So these cost entries were posted to the items that were selected, and here are the different invoice costs that were updated. So now, if we go to any of these items, we'll be able to see additional cost entries being posted. And that's what I'm going to do. So I'm going to go to this one item, this demo 7200. This is the item that we just sold. And you can see here, if I go to the ledger entries, I can see this is what was received in, and it was received in before it was, I think it was $52, right? It was $5.25 each. This receipt has now been adjusted to $8.58 because that landed cost has now increased the value of this receipt. And I can come here to this warehouse, to this item ledger entry, and I can see the cost entries. So I can see here, this is the additional cost that was associated with the assigned cost. That means the landed cost. So now this is what's increased the value of the inventory that's on hand. So it was $52, and now we've increased. So the total of this invoice cost gives us the total inventory cost of this receipt. Okay, so if we go back here, we can see that the original cost was $52. And now if we scroll down here, now the total invoice cost is $85. So we've increased the value of this item, and we've adjusted the general ledger as well. Now you can see here, there's this button, this option here that says pending cost adjustments. This means that something has happened, and because of timing, this item has been sold at the old cost, right, of the cost of $5.12, and adjustments need to happen. Because of that, this item is now, this box is checked off, so it's a way to see that, yes, you do need to actually, there's an adjustment that still needs to happen here. Because if I go and look at my ledger entries for this item, I can see here the shipment that happened. This is the shipment that I just posted. The cost here is still $5.25. There's a function that's run, set up to run nightly, that will adjust and make adjusting entries and kind of flow through and update the cost of this shipment or of this sale. So then it'll update the cost of goods sold as well, because originally when the sale was posted, it took the cost at that time. So this nightly routine is called cost adjust update. We can also go in and manually run that if we need to. So if I come here under this administration section, there's a few things that can be run here and different jobs that are set up. Under inventory, you see you have this, there are a few different things that happen, and often they happen through, like, there's a job that's running to do that. But what I'm going to do, I can click in here and manually run this adjust cost routine. So I'm going to click on that, and I'm just going to run this. This is what happens throughout the night, and it takes into account any costing issues, right? Any adjustments that need to happen. So you can see here, I've successfully run that routine. And now, sorry, if I go back to my item, right? This is the item that I had just sold and then adjust the inventory for. If I look at the item ledger entries now, you'll see this shipment that we just processed was $5.25. The cost from this shipment has now been updated to $8.58, which includes that landed cost that we just associated. If I go to this item ledger entry, you can see here the cost entries. We have the original costs, right, for $15, but then we have an additional $10 that was just created. So now this is what's updating the cost of the item. So this brings me back to my item. So that adjust routine will automatically always run at night, or you can run it manually. And this is just kind of what it does. It runs through and it makes different adjustments. And it's also now updated the cost of goods sold. So if I go back to that sales invoice that was created, from here, we can see that my invoice cost has been updated as well, and my profit has been updated. So that's the process of getting those costs updated. And keep in mind that adjust cost routine is very important, that that's running and, and updating all of your costs, because that'll happen when you have landed costs. And also it'll happen if you receive goods in at one cost, and then once you get the purchase invoice in, it's different. So if you've already sold those items at one cost, and then once you receive the vendor's invoice in, you update the cost, that adjust right routine will update and flow back to all the costs of goods sold in that situation as well. All right, then the next thing I was going to go through was just kind of some month-end kind of financial reporting thing or financial functions. One thing that I want to go through is the bank reconciliation, right? We do have a bank reconciliation function. Now I have this set up. We can have it integrated with Plaid, so it'll pull the banking information in automatically. I don't have this instance set up for that, but this is just for a standard bank reconciliation. It's pretty basic, right? You enter a new bank rec, select the general ledger account number. So these have to be selected as bank accounts. It has to have that bank account field checked on the account. You know, what the end date is, what your statement beginning balance is, and your statement ending balance is, right? You just enter that information in. That's automatically going to be posted. You can enter cleared deposits or cleared payments if you'd like, depending on how you have your information, but it's really the statement ending balance and the end date that's necessary. So once I save the bank rec, I can come over here and click on reconcile. And what the system's going to do, it's just going to show me all of the transactions that are still open for this particular account. And I'm just going to check off that these have been cleared. And as I check them off, we're just going to be recalculating. The difference, we just need to get that difference down to 0, right? As everything's been, as we're going to be checking off lines, what's cleared and what hasn't. There are some ways that you can filter up here. So you can look at only specific information, different date ranges, or a specific amount if you're looking for a specific amount. But it's just a matter of ticking and tying off your transactions. Once I close out up here, I'm just going to refresh the screen. And the system's just going to update this information here, and it's going to give us our ending balance. We want that to be 0. So as you're working through, as soon as that comes to 0 and you've been balanced, then you can go ahead and post your bank reconciliation. And what this is going to do, it's going to adjust the general ledger entries, and it's going to, there's a cleared field that's going to be checked off, and there's a field for the bank statement, and that's going to be populated. So if I come over here, I'll just show you real quick. If I, in this general ledger account in the journal entries, I'm not sure if I have the field here. You see here, it's just going to be marked off as cleared and what bank reconciliation it's on. So that's what's going to happen there. And then, of course, you can report on the general ledger entries to see what's still been outstanding, right, and what you have outstanding in each different bank account. But like I said, we do have the capability to integrate with Plaid so that you can pull your information in and it does auto matching. And then you can just kind of clean up your information as you're working through. The next thing I'm going to go through is some reporting. I'm going to go to one standard Salesforce report. This here, right here, this inventory to GL reconcile as of date. This is an important report that you want to run monthly. And what this report is going to show, it's going to help you tie your inventory value to your general ledger. Because remember, when you receive goods in and when you ship goods out, the inventory value is being adjusted within GoldFinch, but it's not posting anything to the general ledger. It's not until that invoice has been posted that the general ledger is going to be hit. So because of that, you're not going to tie out. If you run an inventory valuation report, it's not going to tie out to your general ledger because there could be items in the interim. See here, we have these three columns that would have interim general ledger account or interim amounts. Anything that has been shipped, but it has not yet been invoiced to the customer. More often, you'll have numbers here, anything that's been received into inventory and it has a cost, it gets an estimated cost, and but it has not yet been invoiced by the vendor. So you haven't processed the vendor's invoice yet, so it hasn't hit the general ledger. That's this number here. So it's been received in, but it hasn't been invoiced. And then on the manufacturing side, we'll also see differences here where you could output some inventory, but it hasn't been completely costed yet. So it still might be in WIP. That would be this number here. So we take this total, there's a sum of expected costs. So it takes the number total of all of these three columns and gives us an expected cost amount. This should be your difference in your general ledger from your inventory valuation report run from GoldFinch and what's sitting on your general ledger accounts in the inventory. So this should be the difference. So at the end of each month, you're going to want to post a transaction, right, for this amount in your general ledger, and then just reverse it out the next day so that you force the balance of your inventory account to your inventory valuation. So we have this standard Salesforce report, and then we also have financial reports, and that's under a different heading of financial reports. So here you can run your basic financial balance sheet, profit and loss and trial balance reports. So I'm going to come in here and running these reports kind of they all run the same. You can look at a specific period, or you can manually enter what accounting periods you're going to be entering. And these accounting periods, again, they're created automatically. You don't really have to create the accounting periods. You don't have to do anything with them. As transactions post, they're going to be going into the actual accounting period range. And this is when the general ledger summaries come into play, because this is what's being pulled onto these reports. You can review your reports either by month or by year, and that's just what columns are going to be showing. And I can also click on show filters here, and I can set filters on different variables. So as I had entered some transactions with different variables, I can look here and run a report for example, just for the sales variable. If I click on run report, it's going to come through and it's going to show me these are the transactions happening just for that sales variable. So you can, filter different ways here. If I take that off and I run the report, now this is just going to be wide open. This is showing me everything that's been posted to every general ledger account number for the time frame. You can click on expand all here, so I can expand all of the lines. Now, this is where all of those sub accounts and the account type comes into play as you're setting up your general ledger accounts. These are the different sub accounts. So these are the different groupings, and this is what's going to total when you run your reports. And then you're going to have the detail in here of each general ledger account number. Well, yeah, we've gone through all the reports. So that was all I have for today for the general ledger and accounting side.